Hey guys, this is a market update. Bitcoin breaking to the upside again out of this pattern that we were talking about in the previous market update. So an upside break there, which is obviously very good news. A little bit of selling coming in right now. And there's a lot of traffic around this 35, 40K level that should see a lot of resistance. But what we want to talk about in this video is all the fundamentals that are driving this. So the Fed in the States, they are done raising interest rates. That gives every other central bank cover to now stimulate and be a bit looser in their monetary policy because all of their economies are in massive slowdowns. We can see all the data starting to come out right now. So let's go through that in this video and how it's going to affect Bitcoin and crypto. Firstly, an upside break to BTC. We are in just a bullish expansion phase of the price, and it's as simple as that, fundamentally speaking right now. And I'll show you all of the data. So when you are more certain of a trade and the market is more certain of a trade, the yield that you get from that trade through a capital appreciation or anything else is going to go down, right? When people are more uncertain of the trade is a better trade to make. But of course, the certainty is that it may not pay off. When the trade was uncertain, you're getting a cheaper price for BTC. Now, as the trade becomes more certain, you are going to have to pay up for Bitcoin because the market is more certain of what's going to happen, and so the yield of that trade goes down. So what are they certain of? They're certain that rates have peaked, rates are going to be cut in 6 to 8 months, the economy is going to weaken, which means interest rates come down on the short end, which is an easier environment for risk assets like BTC, and it's going to trade along with bonds because Bitcoin isn't the stock market. That's how we see things, and we'll talk about all of that data in this video. If you do trade crypto, check out the deposit bonus to Bybit in the description. I trade on here for most of my trading. You can make a deposit if you're new. You can get a deposit bonus up to 30,000. So just check the details via the link down in the description if it's available for you. It's really important to look at the real data and what's happening here in the cycle, because the Fed and all the narrative that's put out in the media by the Fed and the media, the mainstream media is part of this. The whole thing is designed to co-opt and control the narrative because it's not just the physical tools they have to raise interest rates. They have admitted, and they tell this very plainly, that their job is to manipulate how we think. When inflation is too high and wage growth is too high, they manipulate the narrative to convince us that there's a massive shock coming and that we should not demand goods and services to push prices up, and we should not demand higher wages. All of that data is going to start coming out because it's backward looking that has actually happened. And so now they can be a bit easier. Inflation is 3.5% for core. So they don't need interest rates to be at 5%. So for Bitcoin, if rates just come down to a more normal level, then Bitcoin can continue to outperform because it has more growth than other assets. In a normal environment, Bitcoin's going to outperform. In a environment where they have to spend money to prop up the economy, Bitcoin's going to outperform, in my opinion. So look, risk on inflation is now two-sided. They have paused. They have not raised interest rates for 2 meetings, so they're not raising interest rates again. The economic data is becoming weaker, and so we now know the line is in the sand that they have stopped raising interest rates. The Powell pivot, slowing down, is giving us, I think, a better sense of how much more we need to do if we need to do more, right? So what we can see here is this is PCE. We can see this is coming down, right? Once this gets moving, it doesn't stop going in that direction again unless policy changes a lot. So they're sufficiently restrictive right now. They don't need to raise anything more. As we know, for every cycle, they raise, they wait, right? And eventually they start cutting again. They have to start cutting because rates are way too restrictive right now. So that's an easier environment that Bitcoin goes into in the next 6, 12, and 18 months. As we see here, Bitcoin has performed right here. And this is important. Now that the Fed has paused over 2 meetings, every other central bank has cover to print. Expect massive stimulus from China, Europe, and Japan. Why? Well, Europe is basically in a recession already. And so they are just waiting for the Fed to stop so that they can lower rates and try and stimulate. The worst thing for a central bank is deflation, even worse than inflation, because then the whole system, the insolvent banking system, goes bust again. China's starting to stimulate. They have a lead on the rest of the world. Europe wants to, and maybe the States can actually just come out in a mild recession or maybe a slowdown or not even a recession. And if there is a financial crisis, they'll have to print money again. And we know what happens there. So it's important. What's also very important is that the average time between the last Fed rate hike and the first rate cut from 1987 onwards is 6 months. 6 months, we're going to get rate cuts. Around 6 to 8 months, right? Could be 8 months, could be 3 months. But the cycle has changed. And why that's important is because in around 6 months' time, the Bitcoin halving is happening, right? So rate cuts, Bitcoin halving, ETF can all come within the same 3 to 6 month window. So that is the trade. It's so unbelievably obvious as a trade now that the trade is becoming less favorable, right? So when the trade is unobvious, right, to the market, guess what? You get a better trade, but you have to take more risk. You have to make sure that you can fund that trade. The trade is happening. This is it. Yes, there will be pullbacks, but that's not. Price is kind of, it's the direction of the trade, right? Where is the direction of the trade? We know what's happening now over the next 6 to 12 months is that the cycle's changed, the Bitcoin halving and the ETF all coming. So that is the trade, and it's starting to get bid into right now. Looking forward as well to the economy and how it's going to start reacting. We see this is the ISM. So this is kind of looking at current situation of economic demand, right? And this feeds out in backwards looking data and inflation. So this is important. It also is important that inflation, a lot of the numbers is essentially housing, rent, car prices and wages, right? So that's what that's what they're looking at, right? Core PCE. They're just looking at housing and wages because that's really the main thing, right? So we know that housing is way lagging in the way that they measure that, and that's going to keep coming down and pushing CPI way lower and core way lower. Wages aren't being bid up that much in the private sector. Private sector is getting absolutely smashed. Public sector is doing okay because the Biden admin is just spending so much money and centrally planning everything. ISM manufacturing is in contraction. Anything under 50 is in contraction. So this is in the US. The Europe's just a basket case, right, in terms of its growth. So ISM manufacturing 49 under growth, so contraction. Prices paid is 45, well in contraction for prices paid. So where's inflation? Employment, little bit of growth, but basically flat. Right, so again, there's no inflationary pressures in here. New orders in contraction. So that's for the States. Now, when you look at Europe, this is a US. Demand worries plague US and European earnings. Weak demand is on course for record mentions in this season if the trend holds. Right, so where is the demand? So this is all starting to come out in the data, right? The rate hikes have worked. All of the narrative has worked to slow the economy. And now we're seeing this data. As the data starts to come out, the central banks can just ease off a little bit. I'm not saying go back to zero rates. I'm not saying go back to this, profligate money printing. But as the economy cools, so will the central banks. And that makes an easier environment for Bitcoin and crypto, which is in this huge secular uptrend to actually move into an expansion in its price cycle. Talking about that price cycle, we can see it playing out in the data as well. So this is global M2, so the money supply versus Bitcoin. There's a very high correlation here. We're just seeing it starting to inflect to the upside again. It makes sense, right? The Fed's kind of topping out with what it's doing, which gives other central banks cover to start topping out as well, because there isn't a lot of growth in the world. And so, interest rates this high is just going to force everything down. So they're obviously going to have to start cutting again just to keep growth where they want it. And so, M2 is going to increase as the Fed becomes easier potentially as well. We're seeing the data come out right now. So you can see how that reacts. This is Bitcoin and the NASDAQ versus global money supply as well. Seems to be inflecting to the upside from a low. This is volatile, obviously. We're not saying it's just going to be up only, but you can see the cycle starting to trend in the other direction right now. See the liquidity index as well seems to be inflecting off the lows. So all of the data is showing why we're starting to inflect to the upside for Bitcoin and crypto. Crypto has massive secular growth, and it's coming into an upcycle in terms of, money supply, interest rates have peaked. So that's why we're inflecting to the upside right now. Also with this is stablecoins are starting to come back into the market, which is really important. During a bear market, people just pull money out of crypto. Well, that seems to be inflecting potentially to the upside again, right? So stablecoins coming in. Why do people use stables? They swap the stables for assets, right? Like Bitcoin and crypto and trade it. So it looks like people are actually putting money back into crypto. As the money flows back in, right, they're buying crypto. So, there's all this data showing why we're moving up. And that's great. But like I said, If you are waiting for that data to prove that it's happening, you're later into the trade. So you're now paying prices that are 100% higher than the people that just knew that this was going to happen sometime in the future, right? And they were just buying down here. So that's why dollar cost averaging is, usually the best strategy, especially through bear markets, as long as you're confident that the asset you're in actually has secular growth over your time horizon, whatever that may be. But if you're a trader, check out the deposit bonus to Bybit, up to 30K in the description. Crypto Investor course as well has all of my latest research, my investment portfolio, and how I'm trying to play this halving cycle as well. You can check it out in the details in the description down below. I'm James, it's ManZG. Cheers for watching, and I'll see you in the next one.